Hey, welcome back to Everything Money, everybody. I'm here with Paul and Mo. We welcome you in. Today we're talking about Teledoc Health, Paul. This is TDOC, the ticker symbol. You know, this is, I think, under the radar of people's knowledge. We get a lot of requests for this, and I wasn't aware. This is Cathie Wood and ARK's second biggest holding under Tesla. She must deeply believe in this. This stock had a price of almost $300 recently, and it's far less from that now. We wanted to go over the financials of this company, Paul. It's not a new company. We'll go over the financials using our Everything Money software, show you the numbers, and you'll get Paul's take on whether or not he is investing with a company like Teledoc. Paul, what are your thoughts, first of all, on anything Cathie Wood?
So I'm biased against Cathie Wood. I've been saying she was a moron for quite a while now. Jim Cramer, as we saw in a video recently, said she was a genius a year ago, and now he says something that I don't know exactly what he says, but he's kind of criticizing her. I just don't like her process. I think it's stupid. It's inconsistent and stupid. So, frankly, if she buys something, I would probably just short everything she touches because she's an idiot. Actually, I'll say something. Go ahead.
At least you sugar-coated it, Paul. Go ahead, Mo.
And Paul, you're right. You would short everything that she touches. There's actually a fund out there. What was it?
ARK. Yes.
ARK. Yeah, they did short everything she touches, and they're doing extremely well.
And again, so Paul, that's short term. I mean, she's up today, and nothing ever goes straight down. So I'm sure she'll be, if it goes back to 100, 120, she'll be like, see, I was right. And then it's like, okay, sounds good. And it's just, you know, if she says that, all the more reason. Just like now, I don't believe this is the end of ARK right now. I don't believe that it's never going to see above $73 ever. No, these things just take time. All I know is that at some point she'll blame the market for why she's not doing very well. And I would just sit there and say it's not the market. It's just you have terrible investments and you have a terrible process. You have no process. So with Cathie Wood, I do think that her investments are going to end up doing very poorly over long periods of time. But it takes time for these to play out. And she's going to blame something, like I said before. But either way, do you want to take a look at this?
Yeah, before we get into that, folks, what we're trying to do with our channel is be a lifeline for you new investors out there, a constant reminder that you don't have to invest in some of these companies if you see them on YouTube, and especially if you see how wonderfully great their growth pattern is. We're going to show you what's underneath the hood of this company, the financials, using our software, so you can get a deeper understanding of how to look at a company using our 8-pillar method. Paul, go ahead and walk us through it right now.
All right, so this is Everything Money software, more than that a little bit later. So let's look at TDOC. So guys, we used to go through the entire 8-pillar process. Now we skip right to the 8 pillars, and I want you guys to see my thought process when I see the 8 pillars. If you want more information, a thorough explanation of the 8 pillars, at the very end of the video, Seth will tell you where you can find that video in our channel. So 8 pillars, oh boy. The only thing they have a positive on is revenue growth in the last 5 years. Everything else is bad. Now, does that mean in and of itself it's bad? No. But look at this. Income statement. This thing hasn't made money since ever.
Ever.
Cool. Cash flow. This thing has made 2 years of free cash flow in the last 10. Cool. Last 8. Awesome. 8 pillars. I mean, I don't even know what to say. Like, this immediately to me is, I hate to sound biased. If Cathie Wood likes it and it looks this bad, I'm just avoiding it immediately. I know that sounds terrible to say, but I have zero respect for her and her company and her process. I think if Meet Kevin was promoting, it might as well have Meet Kevin or Stock Mo promoting this thing because it's absolute lunacy. I mean, by the way, and one thing I want to make note here, guys, this stock can still go right back up again. My process is for the long term and for lots of stocks in general. There will be the outliers that are able to tough it out, and all of a sudden Teledoc finds some way and she'll say, see, I told you. No, there's no see, I told you, because you don't see the other 98 times it did not work. And that's the main key here.
It's incredible to see that type of revenue growth and that type of net income loss. I mean, it just continues to grow and grow. They did $1.86 billion last year in revenue, and they lost $812 million.
And look at the price last year, Mo. February 8th, 2021 hit $295. The 52-week high is $308. 308. Now it's at 75. That is a 75% drop.
It's incredible.
Now, Paul, Cathie loaded up on more of this last year, mid-November. She bought another 415,000 shares of this. So she really believed she was buying what she thought was the dip. She's down 50% since then. So if I'm a new investor, go ahead, Paul.
Go ahead. Sorry.
Oh, I was just gonna say, if I'm a new investor and there are probably multiple videos on the other side about how wonderful this company is going to be, and I've only heard how wonderful Cathie Wood is. Can you describe an alternative to those two styles of investing? Either just watching YouTube videos saying how great it is, and I guess hoping and praying it works out. I mean, give me your thoughts, Paul.
So I read an article recently that said Cathie Wood, the average investor in ARK has lost 40%, even though the fund is up a ton in the last 5 years. Why? Because the vast majority of investors enter last year because she had an incredible year. So she has to load up. When people buy her ETF, she's got to load up in the stocks in the ETF. That causes a surge. Then all of a sudden it doesn't happen, causes a fall. Now, is it easy to think like, well, this company's growing, so of course it's going to do well? Sure. Then I'll sit there and show you this example. Intel. X chart. In 2000, Intel was at $75 a share. Since then, 22 years later, it has never crossed that path again. So you sit there and say, well, it must not have been growing. Okay. In 2000, Intel did $33 billion in revenue. Last year, it did $80 billion in revenue. So if I told you in 2000 the stock was at 75 bucks, and the next 22 years its revenue was going to over double, would you have said to me that stock is going to go up or down?
The stock would be way higher than $80.
Oh, Paul, if it's more than double, the stock's going to more than double. Okay, cool. The stock has gone nowhere. And it's not just Intel. It's Cisco. It's Microsoft when you're comparing revenue to revenue and price to price. Now, Microsoft's gone way past it was in 2000, but if you compare it, the 2000 peak to the next time it hit that price of $50, let's actually go look at that, because this is something we don't actually do very often. Look at Microsoft, a company that's way further than it was in 2000. In 2000, it hit $59 a share. The next time it hit $59 a share,
keep going,
was
yeah.
16?
2016, yep. And what did it do? 2016, it did $95 billion in revenue. In 2000, it did $23 billion in revenue.
Wow.
Do you see what I'm saying here? $24 billion versus $95 billion, 4 times larger, and the stock was completely flat. Why? Because if you overpay, you are going to have problems. Now, Microsoft has made up for it by growing another double in revenue since then. But guess what? Microsoft's overpriced right now at 304. Of course, I hear people say, no, it's not. Well, it's great. Because in 2012, when I was buying it, everybody said I was stupid for buying it, with $73 billion in revenue. Paul, it's a dead company. When I saw this, I just saw revenue growth, revenue growth, revenue growth, revenue growth. How is it a dead company? So fundamentals work in the long run. Popular opinion works in the short run. Works in the short run. That's all this is.
Is that German?
Name any stock. What was that?
Was that German?
Yes.
I think it was my own little, what was it called? What would be the blend of German and English? Jenglish? Jernglish?
I mean, Paul, I always feel so bad for people that sort of get duped by this. You know, in essence, I've actually argued with you at times because there are people who defend these companies and you call them stupid. As a new investor,
defend the company all you want. Don't defend the stock price.
I see. You're right, Paul.
Literally, I got in the parking lot here today and I ordered Long Johns for a trip to Switzerland from Amazon, and I'm not touching that Amazon price at $3,000.
Long Johns. I guess the point is, this information sharing that we have now being on YouTube, it's very easy to find videos and very convincing people who are passionate about companies, and they actually say they're going through a fundamental analysis to I think broaden their point of why.
The word fundamental is such a broadly used term. Anything can be considered fundamental to some people.
You know what?
Yeah.
Just like Tiger Woods used to sit there and say that he and his wife were a boring couple. They didn't never go out. Meanwhile, he's banging 8,000 women out there. Listen, I don't care what you say. Just because you sit there and look at the future growth prospect doesn't mean you're looking at fundamental analysis. If you're not putting it into a model to say, what does this mean? Am I overpaying for that growth? If you don't know what overpaying for growth is, then do yourself a favor and put your money in an ETF and never touch your money. You'll be doing your money the best favor in the world by never touching it, because you don't understand that you can overpay for a good thing. There is such a thing as too much of a good thing. And when you pay too much for a good thing, it doesn't become good anymore. As Warren Buffett and Charlie Munger always say, all bubbles are start based on a very reasonable and smart premise. Education is important. Great, we have a student loan bubble. Owning a home is important. Great, we had a real estate bubble. Growth is important. Great, then you have a growth hype bubble. You have all these bubbles that occur. It always is based on something fundamental that happens. And guess what ends up happening?
Owning tech back in 2000 was a great idea.
The internet is the next big thing that is very rational. And they didn't even realize how big the internet was going to be. And they were still, guys, the internet is bigger today than we thought it was going to be in 2000. And yet there are still companies that went to zero. The majority of companies went to zero. And the ones that survived, most of them are selling for below what they were 22 years ago. And the ones that are selling above had to go kill it, beyond kill it, above anybody's wildest expectations. If anybody tries to tell me, everybody thought Apple was dead in 2000. If anybody tries to tell me they thought Amazon was going to be what it is today in 2000, you're absolutely lying to yourself.
I remember in 2000, my roommate had an Apple computer, and it was almost like foolish. It was like foolish to have. He was like the dumb kid with an Apple computer. I just always remember that. He'd carry it around because remember it had a handle and they had different colors. Handle, and he was the one dummy with an Apple. So I guess, Paul, for the new investors out there, what's an alternative if you're not diving into something like this? I mean, you said just buy ETFs. That's probably the safest play, wouldn't you think?
It's always the safest play is buy long-term based ETFs. Learn a method like Mo does with day trading. If you really want to be active, Mo's got a great way with his Bid and Ask Nation to day trade, to trade on swing trade, to get into the action where fundamentals don't matter. Fundamentals don't matter in day trading. When it involves charts and stochastics, it doesn't matter. I don't care what the asset is. I love when people try to mix day trading with fundamentals. Why? I don't get it. There are people who do it. This new Money Masters book right here that I have here, these guys all do it. I don't get it, but they do it and they do it well, but they have a process for it. For me, keep them separate. Go do it separately, but keep your money in ETFs. If you want to learn fundamental value investing, you have to be willing to be wrong or be perceived to be wrong. You have to be the outlier. You have to be the guy who everybody looks at and goes, look at this moron over here buying a cash flowing business that doesn't have much growth potential. Okay, now with Facebook, we're hearing, Tim just said it, that Europe is going to shut down Facebook and Instagram. I mean, is that possible? Sure. I just have a hard time believing Facebook they would probably acquiesce to the request before they let that happen. If they really thought Europe was going to shut them down, they'd be like, because guess what? Every European person wanting to shut them down has a Facebook and Instagram account.
Yep.
Okay.
Mo, do you want to show us the charts on TeleDoc? There is money that can be made if you want to trade this on a daily basis, a weekly basis. Mo can show you how. Go ahead, Mosif.
So guys, right here I have this is the long-term chart over here and the daily chart over here. I would not even look at it from the long-term perspective. Just bring it over here on the daily chart. You get a little more detail. And just because this thing is so volatile, swing trade it when you can. When you get a downtrend a couple of days short, go short on it. And eventually, even right now, this is very tough because you're running into these major moving averages. What I would rather you do, just like Paul said, come over to a day trading chart. And you can absolutely just do very well with this because it is a stock that has a lot of daily volatility on it. It's one of these hype stocks that Cathie Wood always talks about. And you can just come over, find a nice trend every single day, even today. I mean, when you hear it, you have it. You had consistent, good green volume coming in. You had an engulfing candlestick here. You're over 80%, and you could have made a move to the top. Yesterday in the afternoon, same situation. You broke 80%, you had an engulfing candlestick, and you could have ran this up throughout the entire afternoon, basically, until about 3:15 in the afternoon. So there are ways to make money on companies like this. The only reason you need to know the name of these companies is so you can type it in right here, right? Type in TeleDoc and go make yourself some money. Just follow the rules and you will be successful, and that's how you trade these hype stocks.
One of our friends who does it literally on the side, he gave me his numbers for January. He made 5.5%. It's one of Seth's friends from college. He is a full-time very professional person. He's a doctor. And he literally pulled up charts while he was waiting for his kids' soccer games to end or pick up his kids, see what's going on. If he saw one, he put a trade in and made 5.5% in January. And by the way, he's been profitable every month. But January was the first time he actually sat there and told me, Paul, I'm going to pay attention to write down every single trade, but his account keeps going up.
And you should see the stocks that he sends. It's NEO, Teledoc, Bitcoin. It's like all these crazy things and it doesn't matter. All you need to do is have the trend, and you will do well.
Yep.
And of course, as Paul would say, stick to a process. Paul, if people are interested in the software behind you, well, not behind you. I always say it because we're always in studio. Let's tell them how you can get it. Go ahead, Paul.
So guys, we created this software because people who are watching our videos didn't want to wait for us to make videos on every stock. There's over 10,000 stocks out there. So we made this software. It includes the 8 pillars that you saw before. It includes retirement calculator, which is phenomenal. It includes a stock analyzer tool, which allows you to put your assumptions in for a stock. It's been our most popular tool. 8 pillars portfolio. You can put up to 50 companies in one portfolio and see how it looks as a total, combining all financials. Exclusive video content. Guys, we post videos every single day into our chat right up here. As you can see, I have messages waiting for me for everybody to sit there and see private videos you won't see on YouTube. Everything here coming soon. This is all available. The biggest thing about the software, though, is this chat. This chat has over 6,000 people. If you feel alone in the investing journey, where you have thoughts on your investing, but nobody else agrees with you, there are people in the chat who agree with you. There's thousands of them, and it's growing every single month. It allows people to have conversations about everything, including crypto, including Tesla. I still, in the highest tier level that only talks to me, I still get people saying, hey, Paul, I still have Tesla. Great. We have a conversation about it. We move on. I'm not as aggressive with them, telling them stupid. But the whole point is, this is all available for $1 per day. Less than a cup of coffee, $1 per day gets you all of this. If it can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it'll make you hundreds of thousands and actually probably millions of dollars. So $1 per day, the price you sign up for today, you're locked in forever in that level. Sign up now, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. Go sign up.
That's Teledoc. We will update you if they ever start making money. It's in a void for us, as always. If it's from Cathie Wood, we're probably avoiding it at the moment. So be careful out there listening to some yahoos out there saying, go ahead, Paul.
If you want more thorough understanding of the 8 pillars, there's a video link below where you can click on it, and I do a much more detailed explanation of every individual pillar.
All right, that's our take. Final thumbs up on the way out. We'll see you next video. Thanks for watching.